What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is December 23rd of 2022. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to provide the thesis that not only Bitcoin is in trouble at the moment, but more specifically talk about the potential collapse of Ethereum. Now, I understand here with Ethereum being the second largest cryptocurrency in the space, or some people see it as the largest altcoin, a lot of people have got their eyes on Ethereum. And in today's video, I want to spend some time to talk about three key things that I think are imperative to know: the price action, the fundamentals, and the skeleton in the closet that no one is talking about. If you guys happen to enjoy this video, drop a like and let's go ahead and kick off the rambling. So I want to go ahead and just start off here with the price action. Now, obviously, we've been talking a lot about Bitcoin as of recent, but Ethereum is a little bit of a different story. To be honest, in the ETH to BTC ratio, Ethereum has been remaining relatively strong. It's been holding sideways since back during really setting in its peak range back in 2021. Now, while it has been holding it strong against Bitcoin, though, there are two things to note. First off, this is what likely is only to be seen as a distribution pattern, a typical, basically, market structure that large investors will utilize in order to offload large positions. This is the same as an accumulation pattern on the other end of the stick, right? People usually refer to this as a Wyckoff distribution pattern or a Wyckoff accumulation pattern. Simply put, if we zoom out, we can see that Ethereum didn't bottom overnight. It went through multiple months, if not an entire year, before it really started to kick off the uptrend. And during this period of time, a lot of large investors probably accumulated massive positions in Ethereum. And vice versa here. People are probably taking advantage of various buyers and speculators, especially those who are buying during big events like the merge, which happened back a couple months ago, to offload a lot of large positions. So the price action itself, to me, is already quite concerning here. But not to mention, if we take a look at it in dollar terms, ETH has been declining alongside Bitcoin here since back in November 2021. It is not in an uptrend. And we can see that we are well below that 200-day as well as the 200-week moving average. We are now very clearly showing that for the first time in history, not only is Bitcoin trending well below its 200-week, but Ethereum is following course. It is not separate because of the merge or its potential deflation aspects with the new EIP 1559 protocol update that came out back a little over a year ago, as well as the merge and move to proof of stake. Just because ETH is deflationary doesn't give it the benefit of constantly going up. You still need to ask the really important question: is there going to be more demand to buy Ethereum at the best available price, or more demand to sell? And while ETH's deflationary principles do help it, it doesn't save it from this ultimate question. And I got to be honest with you all, if we're taking a look at the trend in price, it's showcasing here, whether you're looking in the near term over the past couple of months since August, or really since back in November 2021, that there are much more sellers at current levels than buyers, with no serious signs of strength. So, price action alone is not looking too confident, or at least is leaning more bearish than bullish. Definitely have to give it credit where it's due, that it's holding against Bitcoin at the moment. But again, as we get into the conversation, I'll talk a little bit about why I don't think that'll be for too long. The second point here we got to talk about is fundamentals. Now, you all know I love Ethereum in many capacities. I love that it has pioneered, Vitalik and many other developers have pioneered being able to deploy decentralized applications, smart contracts, and be able to actually explore many different avenues other than just basically making crypto a de facto store of value, right? I think that that is definitely a very valuable use case, but to be honest, it's where Bitcoin has been limited for a long period of time. And it is really unfortunate to see, if you know about the history of Ethereum, that basically the Bitcoin community, or a lot of the higher-ups in the Bitcoin community, didn't really embrace adopting Ethereum, which was originally meant to be almost either, in this case, an upward layer on the Bitcoin network, or basically a functional layer that would allow for dApps, colored coins, all types of different things that would allow for the launch of altcoins and the launch of smart contracts. But even though Ethereum has been a breakthrough player in this aspect, a market leader in providing value in this sector, as well as real adoption comparative to a lot of the kind of faulty L1s that just copied the Ethereum virtual machine and tried to improve the scalability and therefore lower the fees, even though that is the case, I think Ethereum has a lot of major setbacks. We talked about this as of recent with having Radix on the channel, the recent review we did at the RAD5 event. I genuinely mean it when I say it, guys, that I think that there is going to be a chance for Ethereum to be outcompeted by a player who completely rebuilds the experience, both for developers and users. I don't see DeFi or NFTs growing in the Ethereum ecosystem. And that's typical after a kind of blow off top in a bull market, and as we enter into the bear market, things seem a bit slower, but usually you start to see more exciting things being built. Like I saw last time around in 2018. I was following Uniswap, Compound, Aave, a lot of these DeFi protocols that we're actually going to be talking about later on, and I'm just not seeing it. So this alone, already on a fundamentals basis, the fundamental adoption, going back again to the EIP 1559 of burning Ethereum alongside the lower inflation rate of proof of stake, there's not the demand there to really make it deflationary, in my opinion. And if you want to take a look at the metrics, you can see we haven't really been maintaining some massive deflationary rate like a lot of people promised we would have. Right? That only happens when there's a lot of demand for ETH. So the fundamentals, again, in my opinion here, someone who has been usually a long-term bull on ETH, has started to change. We're starting to look like we're getting a bit weak here. And that's, someone who bought Ethereum at $80 to $100 here, has been watching for that golden ratio. Right? We're looking for that next pair of lows. And this third item here, the skeleton in the closet, is something that I think could get us towards a much lower range. Our target range for Ethereum is somewhere around $300 to $500. Now, I don't think it's going to live there very long, but it has to do with the fact that right now there is a big skeleton in the closet. That is over $1.5 billion of cumulative liquidations that could potentially happen in the DeFi ecosystem for Ethereum, the vast majority of which is collateralized with Ethereum. Okay, so let's go ahead and talk a little bit about this here, just for some context. Now, there are a lot of different DeFi protocols out there that allow you to lock up crypto and borrow stablecoins. There are players like MakerDAO, which allow you to mint DAI, which is the native stablecoin. And it allows you to use ETH as well as other different types of altcoins and stablecoins as collateral. But most of the time, people take the traditional route here, especially the longer-term loans on Maker, where back in the day you used to only be able to use Ethereum, and people still use this because they've got large ETH positions. They want to basically take a loan at optimal time, basically have double the collateral, they save it away essentially, and then they take the DAI stablecoin and they go out there and they go make other investments and increase their exposure to crypto, do yield farming, all this kind of crazy stuff. That's MakerDAO. There's also protocols like Aave, which allow you to lock up a variety of different cryptocurrencies and be able to borrow stablecoins. Liquidity, there's Compound, Venus, Uter, Trader Joe, all kinds of different players here. But essentially speaking, a lot of it comes down to MakerDAO. And MakerDAO is a wonderful protocol. I'm not here to say there's anything wrong with MakerDAO. It's very clean, cut, and dry how it operates. You essentially need to have, at a minimum, a 2-to-1 collateralization ratio, essentially meaning that any amount of stable coins or DAI you want to borrow, let's say I want to borrow $10,000 worth of DAI, I need to have $20,000 of Ethereum locked up. And I can have a higher collateralization ratio, I can really be as protective as I want about it, but essentially, if it gets to where my collateral is getting close to being worth less than the amount of DAI that I borrowed, the MakerDAO protocol has ownership of that Ethereum until I pay down my loan, similar to the bank when it comes to a mortgage. And essentially, if I don't add more collateral or I don't pay down enough of the loan, then essentially I'm off the hook for my money. And MakerDAO has an automated liquidation mechanism that will start to sell that Ethereum. So essentially speaking, what we have to worry about here is that if we get into this pocket where there's a lot of liquidations at a certain price range, and this cumulative chart really starts to put it in perspective, if we start to get towards around $750 to $550, you're going to start getting a cascading effect of sell-side pressure in the Ethereum market. Now this is in dollar terms. If you want to look at it in terms of ETH, we're talking about 1 million plus ETH that is at risk of leading us down and causing that additional sell-side pressure to quickly get from, say, $750 and $550 for ETH's price down to $300. And that is the kind of sell-side pressure that the long-term investors are just salivating at the teeth to essentially get exposure to. They are just waiting on the sidelines. And again, we've seen this within price. We're not seeing institutional buyers really coming in here. There's no major volume. There's no major market rallies. Again, as we talked about, all of the rallies here, excluding maybe Ethereum's rally back in August, every market relief rally has gotten weaker and weaker. And again, if we take a look at some of these on-chain positions, which again, it's all public record, we can see this. And what those positions are doing, we don't know who they are, but what are they doing with the existing positions? We can see why a lot of the institutions are not following it. We can see from the on-chain metrics how they're exposed and what they're doing in order to protect themselves, or, for the other fact of the matter, take more risk. Well, let's go ahead and take a look at some of these positions. We've got a $171 million collateralized debt position, or CDP. If we take a look at the history here, while this one is depositing more ETH from time to time, it hasn't done so since back in June of 2022. So this position has remained relatively stagnant. Now it's got a lower liquidation price of $537. This is really the biggest CDP on the Maker protocol. But on top of that, we've got ones that have a higher liquidation price, a $123 million CDP position, right? $724. Take a look at the history here, right? While it has paid down about $6 million in its debt, again, it has over $42 million, right? And as we can see, there have been some withdrawals as well on Ethereum. So this is also not good here. If you're starting to see people withdrawing ETH from the position, there's an available amount to withdraw. This basically will make the liquidation price go up because there's less collateral within the protocol. So we need to be wary of this here, right? Take a look at the third biggest one, $119 million. Liquidation price, $722. Now there have been some paybacks here, but again, also some generations as well. So pretty much unchanged since the summer. Nothing too big, no protective measures being really taken here. A $110 million position at a $705 liquidation price. Generating new DAI here. Now again, we are starting to see again deposits, but this looks like a deposit and withdrawal here essentially. So basically money coming back in. While people again are paying back on some of these DAI positions, they're also generating an equitable amount. Again, going back into the summer, no serious changes here. I'm not here to say that they're taking on excessive risk or increasing the risk here. I think they understand and can feel out the environment here. But my case in point is that they're not showing that they've got the ample liquidity to protect these positions. What I think they're going off of, as a lot of people do using MakerDAO or other types of protocols that allow you to get this additional leverage, essentially speaking, they're betting that Ethereum's not going to come down here. The next one here is, well, the fifth biggest position, $73 million, and this could really be what causes the cascade of liquidations, is this one at $865, the fifth largest position. This one is generating more DAI as the past couple months. In fact, it's been doing that since as far back here during the 2020 summer. Now, again, this position was opened up back then, but ever since then, it's just been adding more and more DAI positions, going in heavier and heavier on its bet. And this is why I'm really concerned. This is the potential domino that can knock down all of those other players who originally might have been safe, because this position has a whopping $73 million or 60,000 Ethereum at its disposal that could be liquidated. And that is, again, going back here on the chart, where the domino effect really starts to play into effect. That's where if we start to knock down some of these large positions here on MakerDAO, we could start tipping the scales and knocking down a whole lot more. I know it sounds far out, maybe it sounds too bearish, but again, if there's no major institutional buyers to provide the ample buy-side liquidity or the bid support to buy this Ethereum at current prices, and we start to teeter down into the hundreds for Ethereum's price, this is not a fantasy. This is very, very realistic. It could very well happen. We've seen way bigger corrections in previous bear markets for crypto in general. We'll see the same as well likely for Ethereum if history is a guide for anything. I gotta tell you guys, looking at the price action, this looks like a repeat of what we saw back in August of 2018, where the major flush for Ethereum had still yet to play out. It comes later on within the bear market, And if we didn't see some major breakout after the ETH merge, which again was years in the making, I don't know what's going to save Ethereum here. There's certainly not any new exciting protocols that really make me think that Ethereum is ready to kick off its next bull run, at least at these valuations. And again, just for percentage decline perspective, right, from the last bear market, top to bottom, we went down 94%. Right now, we are down around 75%. That's a world of difference from a 94% correction. Right now, we're at around $1,200 for Ethereum. If we repeat history, just simply repeat history, not even considering the macro environment, that takes us down to $300. I'm not saying it needs to go to 300, but it's certainly got a chance to go to 500. And if we are doubting that right now, that it can't do something like that, folks, I think those who are in that camp have got another thing coming. Not to mention, we've got a little bonus here as well that we need to talk about, and that is the mining capitulation. Now, this doesn't have to do with Ethereum. This is back to the Bitcoin space. But essentially speaking, we've been talking a lot about the Puell multiple. This is one of the many data science models on our partner platform, CryptoQuant. What's really great is a lot of these resources are free, guys. You guys can, for example, follow my dashboard in the description down below. Totally free for you guys to access if you want. If not, no worries. You can essentially just follow along here in the channel. But I really recommend you guys use it because the big thing here that we've been following is the Puell multiple. And it multiplies or essentially figures out how much essentially miners are starting to get comparative to the norm when it comes to the dollar value of Bitcoin they're mining. Now, we are definitely near the lower end here, but we have not had our capitulation wick like in December 2018 or here in January 2015 or back in October of 2011. I think we are about to see this big time, and there's a lot of warning signs that are signaling this. First off, you've got the declining hash rate, which is finally starting to look very top heavy. We have not seen any major consolidation in mining just yet. And if we take a look at the major stocks or equities like Hut 8 Mining Corp or Riot, which are these originally were multi-billion-dollar mining entities in the United States, they are now fractions of their previous valuation and are showing no signs of optimism here. They're continuing to roll over, setting new lows and lower highs. I think that there is going to be a massive event here sometime going into the close of this year or in Q1. And we've got to be ready to buckle up because as this consolidation plays out, there will be a lot of forced selling. I think this is a necessary step considering the overt amount of risk that a lot of players took in the space. Those CDP positions are a prime example of that, thinking that it couldn't happen. When at the end of the day, people will be very surprised at just how crazy things can get in a bear market. Anyways, guys, I've rambled on a good amount. If you enjoyed this video, consider dropping a like. It's one of the greatest ways you guys can support the channel here. Helps get the word out and help get the video out to more people. And on top of that as well, if you guys have any thoughts on what we talked about, leave a comment down below. Get a discussion going. I'd love to hear some of your thoughts on what we talked about today. But until the next video, everyone, thank you all so much for watching, and I'll see you all in the next one. Take care, everyone.